Good morning, good afternoon. Hey Val, or rather, I hope Val is still on. Hey Jen B, hey Ayakame, how's everyone doing? 2nd of May, I hope you all had a good May Labor Day or Labor Day weekend. We'll give it a couple of minutes before we get started. If you're on the session, drop a message, say hi. I see quite a number of people watching on YouTube. So, don't just sit there and watch. Drop a message and say hi. Let me know you're here. And while you're on this session, while we give it that couple of minutes, do click that thumbs up button and that little rocket ship button so that we can be found easier by everyone else. Hey, Diana. Hey, Booba. Hey, Joshua. Good morning. Good to see you all here. My Google Home thing is going mad, so it's just talking to me. Hey, BL, how are you doing? Anyone traded the Aussie dollar this morning or early afternoon? Anyone? Big surprise from the RBA. Did not expect that. Hey, Serene. Yes, had my lunch. Done that. Oh, it's 3 o'clock. If I haven't had lunch, it's going to be dinner soon. Good to see you too, Ayakame. Feels like it's been, yeah, it feels like it's been a long time since we caught up, right? But I guess that's what happens when we form a habit of turning up. Aussie yen, not a good one. It would have been a bit tricky on the Aussie yen, I would say, just because Aussie dollar strengthening, yen weakening would have been tricky. Aussie dollar is relatively straightforward. Hey Mina, how you doing? From India. Hey Angel Case. Hi Nick. Good to see you all here. One more minute and we shall get going. One more minute. Countdown. 1 minute countdown. Daily market analysis. We're back into it. Alrighty, so let's get started. Again, thank you all for jumping onto the session. What we do here, and we've been doing this for a couple of months already, at 3 p.m. every day, daily market analysis, where I share with you what happened on the fundamentals, what's likely to be coming up, where we could anticipate prices to head towards, looking at the technicals, whether price is reacting to a resistance level or support level, how we could project or possibly look for price movements, put that together, we look for possible trade setups during this session. Okay, so we look at possible trade setups across the major currency pairs. If you do at any point in time have any questions about other currency pairs, do put it into the chat. Let me know. I'll be happy to jump onto those other pairs to have a look at as well, give you my viewpoints on other possible setups. Okay, if you're new to the session, do drop a message into the chat, whether it's on TradingView or on YouTube. Let me know that you're here. Let me know where are you joining from. Okay, for the regulars, welcome back. Good to have you all here. You know the drill. Click the like and subscribe button on YouTube. Click that rocket ship button on TradingView. If you haven't already, do follow me on TradingView. I do share some trade analysis there as well. I've got Ola from Queensland. Good to see you here. I saw Ola's message on TradingView as well, so I'll get back to you shortly on that as well. Okay. What else do we go through? We just had the RBA with their interest rate decision. So all the Aussie clients, right? All the Aussie clients, if you are on the session, let me know. What do you think about rates increasing? I know for sure rates increasing is going to have a substantial, a big impact. We've seen rates increasing over such a long, consistently increasing over such a long period of time. I do have a lot of friends and family in Australia, which, one of the impacts of this rate increase we've seen is an escalating mortgage repayments. It's hitting everyone hard in the, in terms of their household budgets. So, what's your view? What's your view on the consistent rate increases? Right? How's it impacting you? Let me know. It's all definitely beyond what we're talking about. Is beyond trading, right? Obviously, we trade. We know where prices could head towards, but you know, at some level, the data that we look at as traders, as analysts, are always trying to think about it beyond just what we're looking at on the charts. We're looking at it as trying to think about what everyone on the ground is feeling or is experiencing as well. Okay, so Kevin says we're in trouble. That's not a good thing to hear. Impact on escalating cost of living affecting everyone. It is. It's hard, especially with looking at how employment numbers. It's not. I mean, it's doing okay, but it's not really climbing that much. Wages are definitely not increasing as in alignment with rates increases or in alignment with inflation. So I do know, right? And it's not just Australia. You know, as much comfort as I can give you, um, if you're in Australia and you're feeling the impact of this rate increase, it's not just you guys. We've seen it right across the globe, everyone in the world, rate increases, inflation climbing, wages not moving too much. It's impacting everyone else. So that also comes down to the importance of trading well, understanding the markets, making the right decisions. Okay, so that's what we're trying to do during this session, just really to help you through your trading journey. If you have any questions, do make sure you jump on and let me know. Since FOMC, hi Chiwan, since FOMC and NFP on the same week, should we avoid trading US pairs? BL, I wouldn't say avoid trading US pairs. After all, as traders, what's the one thing? What's the one thing that you want in a market? Put it into the chat. What do you guys think about, right? What's your answer? What's the one thing that you guys want in a when you're trading? It starts with V, it ends with Y. Well, apart from money, it starts with M and ends with Y. Yeah, right. Ola got it right. Volatility. So you do want, or I'm sitting there, I'm sitting here. If markets are not moving, prices in consolidation, I'm not jumping to any trades. What I want is volatility. So I wouldn't say that because there is FOMC coming out, because there's the non-farm payrolls to be released towards the end of the week, I wouldn't say that you would avoid trading the dollar pairs. And if you avoided trading the dollar pairs, there's not that much else to trade because everything is still going to be more or less correlated to how the dollar moves. So it is really preparing, understanding the different scenarios of rate increases to come from the FOMC, NFP numbers, prepare scenario planning, just so that you can take advantage of that potential volatility. Okay, so definitely a bit of a different approach we can consider rather than to just avoid it. All right, hey Goju, good to see you here. Um, Jan B got it right. Ayakami got it right. Hey AL, how are you doing? Making me lots of money. Thank you, BL. More of a good time to make more money. Okay, and that's it, right? There are a lot of situations where there are big news to be released, especially this week. I like to take on trading with a bit of a different approach. Right? A lot of people do trade news. A lot of people trade news events, and when they come to news events, they think I'm going to size up. Right? I'm going to size up. I'm going to make a little bit, but because I size up, it's going to be a lot. I'm going to be opportunistic. I'm going to try and make more money during these volatile times. A little bit of a different approach I would suggest for you guys to try and adopt is, especially for myself, when I'm trading on a news event, even more so on a high volatility news event, I will tend to size down. Okay, I'll tend to size down even to half my usual lot size because you know that price is likely to move by a lot, right? Price is likely to move by a lot. So instead of trying to size up and take a little bit, I'll try and size down to try and ride a bigger move, right? It could move quite a bit. So even a smaller trade could make you a good return, but you do take on a little bit less risk. Remember that anytime you're in the market, you are exposed to risk. So I would always size down, especially on big news events, and then try for that. Not big moves, not like long sustained move, but the spikes to take advantage of the spikes on a smaller trade size. Okay, so before we jump into all that, just sharing with you some points of views as you guys bring up that question. Okay, so do keep it coming. I appreciate the questions, the points of view. Happy to share with you how you could approach the markets with a different view. But that said, the usual disclaimer applies is that any information contained on this webinar should not be construed as advice and is presented as educational material only. If you do jump into any trades, please make sure to check and to do your own due diligence, DYODD, because the contents of this webinar is not intended to be a recommendation to trade a financial product. The way I trade, the way I look at the markets, the way I look at possible trade setups might be different to what you're comfortable with because your risk, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. I know that many of you do counter trend trades or like to trade across, I wouldn't say exotic pairs, but cross pairs. So it's going to be a little bit different. Do bear that in mind, all right? And we do have the community, a free trading community there for TradingView members. It's in the signature. You can click on the link and join up from there. The YouTube members, I've just put in the link there as well. So if you haven't already, do click on the link and join up. It is free to join. It will be free to continue being in a community. You have my word on that. What I do ask from everyone who joins is to be proactive. Share your trade ideas, share potential trade setups, ask questions, be open to learning. And then I'm very sure that as a community, we'll all trade better, trade more profitably, trade for the longer term. Okay, so with that said, let's keep going. So we didn't have a session yesterday. We didn't have a session yesterday because it was the 1st of May. We had the long weekend, right? It was May Day. So it was a Labor Day here. So we all took a bit of a break here. We did have the US ISM manufacturing PMI that was released, was 46.3. Expected 46.8. Oh man, my voice is going in. Expected 46.8, came out at 47.1. A bit better than expected, but we didn't see price move as with the data. One reason is because of new news about let me just scroll through that and find you the headline. The First Republic deal has come at a crucial point for the markets. Let me just open that. Right, come at a crucial point for the markets and the economy. Ends the panic phase of the banking crisis. Fallout left to a pivotal week for markets and the economy. Unsuccessful effort to keep First Republic open, the largest U.S. bank by deposits, which a deal of over the 14th largest financial institution. Okay, so what we actually saw possibly was with all that uncertainty about the banking sector, which happened a month ago, a month and a half ago, 2 months, possibly some move, some uncertainty. That's why we saw dollar being super choppy right across the board over last month. Right now, with the news, we actually saw the dollar index. This was last night, pushing, right? Strengthening, pushing up to that 102.20 level. This level was identified when we spoke on Friday, right? I was looking for it to come up to 102.20. Didn't expect it to drop as much first before going up. But it's got to that point. It looks like it's hit that level and might turn back down. So we'll look at that. But that was the big news from last night. Moving on, looking at today, at 12:30 p.m. GMT plus 8, what we saw was a surprise, a big surprise from the RBA where they hiked rates by 25 basis points from a 3.6%. Market was expecting a no decision or no action meeting, holding it at 3.6, but it was a surprise 25 basis point rate hike to a 3.85%. Okay, so one more thing to look at is in the rate statement that accompanied, they hiked cash rates by 25 basis points, and also they were still saying that 7% inflation is still too high, with rate increase warranted today. They have also previously indicated that they were going to continue increasing rates, but we're just wondering whether a slight downturn in inflation could have caused the RBA to put a pause, but they didn't. And then the next point is that keep the economy at 2% target range, soft landing, there. Some further tightening of monetary policy may be required to ensure that inflation returns to a target in a reasonable time frame, but dependent on how the economy and inflation evolves. Okay, so at this point, how do you get a rate statement? Good question there, Kami. I'll send that to you. The link is there. Okay. Um, so at this point, it looks like there's 25 basis point rate hike. Well, as much as it happened, we might be looking at further rate hikes, right? Because some further tightening may be required. If inflation remains sticky or doesn't drop more significantly, we might at the next meeting be looking at another rate hike to come from the RBA. Not great news for all of you Aussies in Australia at this point in time. Sounds like there is more pain ahead, but I think that it is coming close to the level where the RBA would have to start considering a pause. Right, it is coming close to that level because combination of high interest rates, cost of living pressures, and early decline in housing, leading to substantial slowing in household spending. Right, so they wouldn't want to get to the point, right? Others are suffering, experiencing painful squeeze on finances. I'm very sure, or rather, I'm almost certain that the RBA would not want to get to a point where they're increasing rates to the point where they might bring inflation down, but with rates so high, household spending is going to suffer, GDP is going to suffer. They swing the whole economy into into a recession. Okay, so I think it's that balance of hiking rates, but yet hiking rates to bring down inflation, but yet still keeping the economy stimulated enough so that they try and navigate through or navigate around a possible recession. So with this rate increase that we saw, surprise rate increase that we saw from the RBA, what we actually saw on the Aussie dollar was a push, right? So at 12:30, the news got released. It went straight up. Started at 0.6629. Within the hour, closed at 0.6693. Went up slightly more. We had the resistance level at 0.67. Seems to have broken. It is testing that resistance range, so I wouldn't say it's broken yet. It's testing this level, might retrace a little bit before potentially bouncing up. We'll have a look at that in more detail. So Buba asks, where do I expect the next resistance level to watch? This is the level to watch right now, 61.8 FIB level here. Okay, we saw it resisting once and twice, and then now again, if it retraces and bounces back up, then the next big resistance was back in on the 14th of April at that 0.68 level, right? 0.68 level. So I hope I answered your question there, Buba, about the next resistance level. A bit more analysis to go through before we can think about that level first. Okay, so that was what happened on the RBA front or the Aussie front this morning or early afternoon. Then for today, moving on, we do have some PMI numbers to come from the Swiss, which is going to be released in about 7 minutes, just under 8 minutes. We do have the Euro with their PMI numbers again. Again, I don't think this is going to move prices too much for now. 5 p.m. CPI flash estimate for the Eurozone. Look at it, possibly going from a 6.9 to a 7%. CPI flash estimate looking to go from 6.9 to a 7. A little bit of a surprise. I wouldn't say surprise, but a little bit of a, can't think of the word. Okay, because in March it's gone from 8.5, expected 7.1, dropped to 6.9. So a little bit of a reverse, right? Given that it might go to 7. If that does happen, then the likelihood for further rate increases to come from the ECB this week on Thursday, right? We do have a rate increase coming up with 25 basis points. We might see or hear a bit more of a hawkish ECB to come on Thursday because of because of this CPI data and also that rate increase. Okay, so watch out for that. And then JOLTS for the US today, 0.93, 9.93, 9.74. Might look like another drop. So job opening is dropping, not a great setup for the US. So anticipating putting all this together, what I think is likely to happen here on the dollar. Okay, what I think could happen here on the dollar is that we might see, let's have a look. We might see a retracement. So we saw this already. I'll take this away for now. We might see this retrace down to 101 maybe 101.80. Okay, I think that we might see this drop to 101. Okay, I think what we might see on the dollar, just to show you the overall, try to move this away for now. Overall picture here on the dollar index is still within this range of 102 and 101.60, right? It's had a small breakout, but it very quickly reverses back into the range. For now, I do anticipate that it might come down to this. Dollar index could drop down to 101.60. That's a relatively big drop. Looking at the news. Yep. Okay. I think that the dollar index, because look, Aussie dollar, surprise rate hike. We saw the Aussie dollar strengthening against the dollar, bringing some downside to the dollar index. Anticipating that at 5 p.m. we might see some stronger than expected CPI number, possibly causing the euro dollar to push up, right? As people price or traders price in potential for a hawkish ECB, and then job openings dropping from a 9.93 to a 9.74, some dollar weakness. I think that we could see the dollar If it does close in the next almost 30 minutes, if it does close below 102, we could see a trade down towards that 101.60 level. If it does break below 101.60, right, fair enough, it could drop further, but I think any downside from here could lead to a big reversal back into this range. I think we're likely to see the dollar trade within this range in the lead up to the FOMC this week as well. Okay, so second of oops, what did I do? Okay. 2nd of May, dollar index could break. I would say look for it to break below 102 to trade down to 101.60. Okay, so looking at some weakness on the dollar index to carry through. I see your question there on gold. I will get to gold shortly as well. Okay, so that's the summary sheet and the view on the dollar possibly coming down towards 101.60. With that in mind, then looking at the Kiwi dollar, right? So we saw Kiwi dollar on Friday. We were looking for it to test and reject that level. It didn't. In fact, it tested a little bit, looked like it's coming down before pushing back up. So it didn't test and reject. We'll take that away and that as well. Okay, now that it's broken this trend line, right? It's broken this downward trend line. It's showing some upward push, even to that extent. Nope. Okay, now it's broken this trend line. I would say that very likely, expecting that dollar weakness, we could see the Kiwi dollar push up from this 0.62 level with that recent high at 0.6225. 25 pip move from this point up towards that resistance level. I don't think it's worth jumping into a trade towards that resistance. Right? It's right in the middle of this level, so I don't think it's worth trying to scalp that up. If it does break above this resistance, then the next big resistance is at 0.6314, right? Or 0.6315. I would say that if price does break above this point, you could see it trade up. I don't see a reason for it to have such a big move. Right? I don't see a reason for it to have such a big move. I would say that if it does break above 6225, you could be looking for a buy. So let's say 6230 towards that 61.8 level, almost 40 pips. Stop loss can be relatively tight, even at a maximum of 20 pips. You look at a 1:2 risk reward ratio to the upside, right? It could even come up to that point, right? So I know 61 is there. I'm possibly thinking it could come up to that point there. Maybe Haider, good question, right? So maybe FOMC could push that. Just again, a quick reminder to everyone is that we do this on a daily basis. We do this analysis on a daily basis. So I'm really looking at, any targets I look for, any entries I look for is something for today, right until the next time we speak, which is tomorrow at 3 p.m. So the FOMC is on Thursday morning. So I wouldn't, any trades I'm looking at, I wouldn't be too concerned about it for now. Okay, and bear in mind that tomorrow at 6:45 we do have the Kiwi with their employment numbers. Unemployment rate 3.4 to 3.5, employment change 0.2 to 0.5. I think what we might see here, we might see an upset on the employment numbers. So I think this might stay at a 3.4%. We could see unemployment stay at a 3.4%. We could see employment change at a 0.6. So a bit of an upset there, and then that's possibly going to lead to some upside on the Kiwi dollar. Okay, so does need to break above this level to push up. You can see the dollar retracing a little bit now. That's why the Kiwi dollar is retracing as well. Okay, so I'm looking for this to push up. If it does hit this level, and turn down, then you might have a similar trade like what we saw here, a reversal from that 6225 level. But if that happens, then I'll update you guys in the community. So do watch out for that. But overall, I'm still looking for that move to the upside. So 6230, 20 pip stop loss, 40 pip take profit. Good one, Diana. Buy 0.6230, stop loss 20, take profit 40. Cool. Yep, I agree entirely with your view there, Diana. All right. So with that, then looking at the Aussie dollar, we went through that already. Now the low side is breaking that 6-7 level, needs to close above Bollinger Band. It's right on that level. That's why it's retracing a little bit. So I'm looking for it to maybe bounce or consolidate around this level. Right? It should likely consolidate around this level. If it does close above 6720 to be safe, okay, your take profit could be at 6790, about 70 pips to the upside. Stop loss reasonable would be about 30 pips. Okay, so I think it's going to bounce around here, and then if it breaks out, we could see it push upwards. I can do CAD yet as well, AL. I'll get to that shortly. Okay, so relatively straightforward there on the Aussie dollar. 6720, 30 pips, 70 pips. Okay, buy 0.6720, stop loss 30, take profit 70. Right, there we go. Looking at the way the dollar is really sitting at a 102 level, retracing. I think it's going to consolidate there, look like something like this. Then ideally look for it to break to the downside. So just watch. Not ready yet. All these are not trades to be jumped into right now. Just wait it out and see what happens. Okay. Then the dollar yen. All right, dollar yen. The last time we spoke about this, could retrace briefly, buy from this to take profit 180, hesitation at 137. There's your 180. It came very close. I did get into this. I got out a little bit early. I got out. Yes, I think I left my trade running and I got out at this point at 137. So that was a trade I left running and it just went to 137. Would have loved to see it hit 138, but I wasn't watching my trade. So that trade went well. Hope you guys got into that. Take that away. Take this and these away for now. Okay. Now, given again, a big reminder is that on Friday we saw the Bank of Japan, Governor Ueda's first policy meeting didn't do anything of a surprise, didn't change anything. the divergence between monetary policies in Japan and the rest of the world is still there. That's why we saw this push towards the upside or continued push towards upside. A question in the community earlier today was any further upside on the yen, right? Any further upside on the yen? What I would say is hold your horses, wait, right? You can see that the last time we came to this point, hit, so it's quite a steady climb up. And this was early March, it hit, and then we saw a big reverse all the way back down. So hold your horses, wait for price to react to this 138 resistance level. Okay, wait for it to react to this 138 resistance level. As much as I would love to see further upside on the yen, I think that if the dollar does drop down, then we could see this retrace back down. The next big resistance level beyond 138 is at, let me have a look. I would say 130, 140. Right, so right about that point, 139.90, so about 140. So coming back to the present, I think that if it does break above this level, great. I'll be looking for 140. Potential for this is that if it does turn down, okay, here we go. I am looking for further upside on the yen towards 140 if it breaks above 138. But as a counter trend opportunity, what you guys might want to do or consider is a reversal. This is a big reversal, okay? So this is a high risk move, a big reversal. Early entry, very early entry will be below 137.30. A safer one will be below 136.70. What you could look at is a trade like that, 150 pips to the downside. Because it's breaking that 23.6 level, I would say your stop loss will be very tight. Right, as a counter trend trade, if it does break down, you can see a big move to the downside, you can keep your stop loss very tight there. Okay, so I'm looking at possibly this as a counter trend on the yen. Then naturally, I'll be more tended towards it breaking to the upside, 138.10, 180 pips up, stop loss maybe about 40 pips to the downside. Between these two, which would I prefer to see? I would love to see it go up, but I think it's likely that we could see it trade back down again. Okay, so US yen, I would say that we could see counter trend. Sell 136, below 136.70, stop loss 30, take profit 150. Sell below 136.70, stop loss 30, TP 150. Is that right? Yep. There we go. Stop loss 150. If price breaks 138, could see 140. Okay, so this is trend following. So, question from Buba there is, if you're long on the Aussie, what's a safe support for now? If you're long on the Aussie, oh, look at that. I love how it's moving right now. I want to see that go up. If you're long on the Aussie, then I would say 0.67 is a good support level, is a resistance turned support. I wouldn't move my stop loss there right now. It could fluctuate along this level. I would say maybe 6690. Once it breaks and closes above, or once this trade gets triggered, then I'll move my stop loss to 0.67. Okay, so just look out for that. And it looks like it might be coming close. It looks like it might be coming close. Okay. Right, I lost my train of thought. Okay, so now looking at the pound dollar. Which exchange do you use for forex trading? I use a whole variety of platforms. So depends on where you are, whereabouts in the world you are. You have a lot of different options. If you want any review or feedback, it's all out there. Or you can join the community. We are able to share stuff with you over there as well. Okay, so pound dollar, we were looking for it to test and come back to that trend line. It didn't test and reject. It just broke through all the way and now retracing back down. With the way the Aussie dollar is going, with the way the dollar index is going, I think that we could see that as well. So you had that big upward trend line holding prices up. Now that upward trend line or shorter term upward trend line holding prices up as well. This would be a quick trade up. I would move this resistance to this point. Okay, I'll move this resistance to this point. I would have this as a bit of a dotted line. Then with this, I would be looking for buying opportunities if it closes above 1.2515. 1.2515. Take profit about 60 pips. Stop loss, you could do 30 pips or 1:2. Risk reward ratio to the upside there. Okay. So pound dollar, I'll be a bit safer and say I'll take this away. I don't think this will come into play. I say 1.2520. Stop loss can be a bit tighter there, about 25 pips. Take profit about 56, 60 pips to the upside. Yep, I like that one. Yep, I like that one. Okay, so pound dollar, bouncing off that trend line, bouncing off that resistance turned support level, indicating further upside potential. If it closes above 1.2520, stop loss 25 pips, take profit 60 pips. Okay, so pound dollar buy above 1.2520, stop loss 25 pips, EP 60 pips. Oh. All good so far. If you have any questions, let me know. If it's good, put it into the chat. Let me know that it's working well for you guys. Just looking for that feedback on how we can do this better. Okay, euro dollar didn't. So we're looking at this on Friday last week. We're looking for the sell down below 1.0990. It came down, hit that support level, and then bounced straight back up. So 1.0970 as a support area holds very strong. Now, looking as it finds that, so why is this a support level that holds very strong? We can see that it's tested so many times and failed to break lower. So now looking for this to turn back up, I would say that, all right, so if it breaks up beyond this trend line, which seems to have been invalidated already, could be doing that. So it still forms a trend line support here, and then now it's bouncing up. Needs to close above 1.10. right? It needs to close above 1.10. Could be a, and again, you guys know my standard warnings is that everything I'm looking at is all towards that dollar weakness. So just be extra careful if it doesn't swing that way, right? I would like to say buy above 1.1015 towards 1.1080, but it's a 1:1 ratio to the upside if you have this very safe, right? Um, but I wouldn't want to get in too early at this point, unless it's something that you want to take a risk on. Okay, what I would do here on the euro dollar is nothing for now. Wait for the CPI number to be released in about an hour's time, just over an hour's time. If we do see it push up, I'm looking to see it come up and test this 1.1080 or 85 level. Okay, so a little bit of a risky move. You could be looking at this hour to close. So 1.10, stop loss 40 pips, take profit 80 pips to the upside. If the resistance is strong, then break to upside is reasonable. Yeah, it is. It does look like it's going to go up, but it does need a little bit of a push. Okay, so definitely not looking for a sell. I think sell side might be limited. So I'm looking to buy 1.10, stop loss 40 pips, take profit 80 pips. Okay, good. Now, and with the way it's moving, I think this would be a good move. I think it's going to sit there. We've got 12 minutes to the candle close. I think it's going to sit there, and then the next hour we could see this push up, and we could see that move to the upside. US Swiss franc didn't go all the way up and test down. It did come down to that support level. All right, so take these away. Now pushing up, aligned with not to the dollar, right? News on the Swiss franc, PMI numbers weaker manufacturing PMI numbers for the Swiss. Possibly that's why we see this push up. Looking for a reaction at 0.9, possibly going to test and reject. So it's the same view as what I had from the last time round. I'm looking for it to climb up. Don't do anything yet. Test and reject to the downside, 70 pips. Stop loss can be tied at about 20 pips at a maximum even on the US Swiss franc. Can take that away for now. Okay, let me have a look. Can we apply something else? Yeah, about something like that. So we've got this tested, and then we see a reaction at that resistance. There we go. That's the US Swiss franc. Okay, I'm happy with that. Sell if resistance rejected at 0.90. Stop loss, I would say 20 pips, take profit about 70 pips. Then, all right, there we go. Okay, cool. Dollar just being a bit weird, sitting at that resistance support level, looking for it to break. Then US CAD, right at that support level, didn't break higher, trade didn't trigger. Um, Bounce off this level, push up, yen sinks, yen Canadian dollar strengthens, benchmark yield climbs. As much as it's strengthening, seems like a good support here at 1.35. I think on the flip side, we've been talking about dollar weakness right across the board. On the opportunity that the dollar strengthens, we could be looking for a buying opportunity here on the CAD and at about 1.3550 recent. I'll do over the recent high, over today's high. So 1.3555, take profit, 85 pips. Don't think this, I think this will be a hesitation level. Stop loss, maybe about 30 pips. There we go. That's good. Okay, so looking for it to bounce off this level, climb up towards that 1.365545 level, hesitation at 1.3590. Okay, so buy 1.36, 1.3555, 1.3555. Stop loss is about 30. Take profit about 80. Take profit about 80 pips. There we go. Okay. All good so far. Thumbs up, rocket ship button, much appreciated. If you find the session useful and informative, do let me know. Dollar retracing a little bit, forming a bit of a pin bar there, but not too concerned at this point. Right, let it sit there. Might look for it to break to the downside. Then looking at gold, we have gold and CAD yen. Okay, looking at gold, we were looking for it to climb up, test this level, and come back down, possibly break downward. It did bounce off this, climb almost to as high as I wanted before turning back down. I did have some quick scalps on gold, but you can see right now, zooming right out, okay, big downward move of that 30, what was that, 38.50% level, still holding strong. This 50% holding is very strong there. Came up, tested. I would adjust this and say that's holding. And this one would be there. Again, with the dollar potentially weakening, we could see this push up. Right? So looking at the dollar, it is forming some strength now. That's why we see this trade down. But I will be, if not right now, or maybe if it does break down, what you could be looking for is this move. Okay, what you could be looking for is this move to the upside, or a smaller move down, really a rebound and a test back up again. Overall, I think for the short to medium term, the 2000 level is going to prove as a very strong resistance level, right? As a short to medium term, 2000 is going to prove as a strong resistance level. It's going to fluctuate around this point, but we, always be prepared for it to break out and see significant upside. Okay, so I would do short-term scalping to the downside, but looking for bigger moves on a buy, on a breakout buy on gold to the upside. So looking for it to bounce off 1980 to get to 2000. 1980, ranging from 1980 to 2000. Still holds by opportunity if on bounce. Okay. Hope I answered your question there, Nutili, on gold. Do a quick review as we come towards the end of the hour. Kiwi dollar still there, Aussie dollar, right, priming up. Yen sitting right there, so it needs to break. We have that good opportunity on yen. Pound dollar might bounce and push up. If it does break down, you could be looking to sell, but I'll be very careful on that. Euro showing like a strong rejection. Euro dollar showing a strong rejection. Despite some good news on German PMI, I think that it's going to be a bit of a short-term down and a bounce back up. What you could be looking for here on the euro, if it does have that rejection, then you could even be looking for a buy 1.0980. So look for it to come down, test and bounce off. Tight stop loss at about 20 pips. Take profit at about 60 pips. So either or, right? If we push straight up, then I would be looking for that move. If not, then I'll be looking for a test of that support and then a push back up. So that's two possible trade ideas there on the euro dollar. Swiss franc pushing up, looking for it to test and reject. US CAD looking like a good potential move to the upside. All right, so after looking at US CAD, looking at the yen, then someone asked, where was it? On the CAD yen. Okay, so looking at the CAD yen, pushing up, looking like a bit of a retracement. CAD weakness, because if the US CAD pushes up, that's going to be dollar strength or CAD weakness. So that's going to come back down. But I think that given the way price has been climbing, right, a retracement, I know a retracement is going to be attractive, right? A correction to the downside is going to be very attractive. But I would be very careful. I would like to see it come down and test and go back up. Right? I think that's more likely the scenario, but if it comes down and breaks, breaks below 23.6, if it breaks below this 101 level, okay, here's what I think on the US CAD, on the CAD yen, is that if it comes down and it holds 101 holds, then we could see this push back up. If it breaks down from 101, then we could see it have a good strong correction back down again. Okay, AL, your question on the CAD yen. I think that the level to watch is at 101, right there. Right, if it bounces off this level, then we could see it trade up. There we go. I just saw someone get electrocuted by his laptop, just out of the corner of my eye. This is why I'm smirking a little bit. Okay, so I think that we could see a retrace. If it bounces off 101, we'll see it trade back up. If not, then if it breaks below, we could see it trade back down on a correction. Okay. Any further questions? If you haven't already, do make sure you join the community. If you haven't already, do make sure you join the community. The link is there. I know it's going to get some choppy once I bring this up. Hey, Spiros, you didn't say hi, but good to see you here. Okay. Okay, so do make sure you join the community here. I see a couple of you have already. We also do have an event for all the members on the session. This is on Zoom. We're going to do a hangout session tomorrow, 8 p.m. GMT plus 8. It will be a video on for everybody. You get to know everyone better, sharing some trading strategies. And there is a FOMC to be released on Thursday morning. So I will give you a prep on the FOMC or my views of where I think the FOMC could be heading towards. Right, so this will be on Zoom only. The only way to join this session is if you're in the community. Okay, so make sure you join up. I saw a session of Diana's. No, wait, someone said. Spiro said Euro is reacting. Okay, good. It's coming to this point. Needs to bounce. If it does break, right? If we see a big reversal on or on the dollar, especially if it just breaks straight upwards, then I'll send you guys a quick update across onto the community. We might have to change a lot of viewpoints on a lot of the other pairs. Okay, a little bit surprising that we're seeing that strong retrace right now. Question is whether this is going to be a sustained move. Question is whether this is going to be a sustained move with no major news on why it should retrace or the dollar should strengthen that much right now. Okay, can I have a look at BTC? I can. Here it is. While we're looking at that, take that away for now. See that liquidity grab, big push up, came down. Looks like, I mean, I don't trade BTC on a short term. I don't even trade it. It's more like a long term kind of view for me. Found a good support at about that 27,800 level. Could be looking at could see it reclaim 28,800, 29,000 level. Okay. Yeah, it does see it needs to break above this point. So that 28,000 level, if it breaks above that point, we could see it climb back up to about the 29,000 level. Okay. So I hope I answered your question there, Buba, on BTC. Possibly not ready to buy yet if you're doing short-term trading. 28,200, and we're going to see potentially some good upside. Alrighty. So with that said, please remember, trade well, trade safe. You can take this discussion beyond this session if you join our trading community. I will look forward to seeing you all there. And with that said, I will publish the summary sheet after this session. And I'll see you tomorrow. Same time, same place, 3 p.m. GMT plus 8 on TradingView and on YouTube. So for now, bye-bye.